Ted-san, are you ready?
I am ready.
Okay. So, can you see the pictures? I think you took the picture. Is this fox?
Yes.
Can you
Yes,
see
it's at my ranch. Yes.
Yes, I heard that you live on the huge lot, about 20 acres. Is that correct?
That's correct. Yes.
Okay.
It's on Viejas Mountain. You know, the Viejas Casino right next to
Wow. And then this is your friend. Fox is your friend.
that. To be honest with you, I actually have to go in a half hour to feed them because they come by and visit me at 7:30.
Wow, that's nice. Okay, so I'm gonna introduce your bio to attendees. So meanwhile, you can prepare your screen.
Okay.
Okay. So, ranchoted のこのオーナーの方。You can click the share, but I'm gonna stop share.
I think I did click share.
Okay, you can click your share green button.
Yeah, I'll get it.
Okay. So, ランチョテッドのオーナーであるこのテッドさんを今日はゲストスピーカーにお招きしております。テッドさんは約30年間ファイナンス業界でご経験があり、融資における信頼できるエキスパートです。で、彼はもともとこの普通の住宅ローンの方に携わっていらっしゃいました。しかし実際に融資を受ける資格があるのに、この融資審査の段階で承認されなかったこの納得のいかないケースを多く見てきて、でそういう方々に融資の枠を広げてあげたいという志からこのハードマネーレンディング、プライベートマネーレンディングのビジネスを始めたそうです。で、テッドさんはサンディエゴにあるさまざまなこのプロフェッショナル、不動産エージェントの団体、Women's Council Realtor などのスポンサーもされており、それらのサポートを通して広いネットワークを構築されていて、このランチョテッドというもう愛称で呼ばれて多くの方々から親しまれていらっしゃいます。で、プライベートでは多彩な方でアメリカのサッカー協会の A ライセンスコーチの資格をお持ちで、アシスタントコーチとして UCSD ユニバーシティカリフォルニアサンディエゴ校のサッカーチームを2度全国大会の優勝に導いた方でもあります。で、少年サッカーでも有名なノーマッドの私の息子もサッカーのチームに入ってたんですけれども、このすごく強いこのサッカークラブのコーチもされていました。というように講師ともどもご活躍されています。それではテッドさんに今日はお話ししていただきたいと思います。Hi Ted, are you ready? You can start it.
Okay. All right. Well, good evening, everybody, or good morning, or good afternoon,
Ted?
wherever you are. Yep.
Ted? Oh, you can
Yes?
turn on your video. I'm going to turn off, but you can turn on.
Okay. Let me.
I want to see your face. Oh, great. I can see you.
Okay.
Yes.
You can see me?
Yes.
All right, because I can't. All right. All right. Let's make sure this thing's working here. All right. Hold on one second. All right. There we go. Okay. Well, thanks for having me. I'm not sure how this works because I'm speaking English and you guys are talking Japanese, but Yumiko tells me that you'll understand, I guess, right, Yumiko?
Yes, correct.
Okay.
Everyone
So-
is waiting for you to listen see your presentation.
Okay. So what I do is called private money lending, also known as hard money. It's not the correct name, hard money, because the money isn't very expensive like it used to be. It used to be very expensive where the rates were 12 to 14% and 6 to 8 points. And now it's down to 8% and 2 points. So, but yeah, this is what I do. And I help people get loans when they can't get loans through bank. So I'll get into it here. So the bottom line is people get themselves in situations and I have creative solutions to help get them out of the situation they're in. I've been in the industry 30 years and I was a mortgage broker up into 2008 and then switched over to private money lending. And so that's what I've been doing. And The name ranchoted comes from, I own a ranch in Alpine, and I used to work for a company called Rancho Financial, and then somebody suggested to use the name ranchoted, and that is where the name comes from. All right, so when I was a mortgage broker, it was very frustrating because in 2008, the banks were turning down everybody. And no matter if you had good credit, good income, a lot of equity, all different reasons, people couldn't get loans. And it was to the point where I wasn't really enjoying the industry. And that's when I switched over. And I realized that the subprime loans were no longer available, and private money would be the way to go for people. So then I switched over to doing that, and so that's how this all begins. The three main reasons people get private money is, number one is self-employed. Most people who are self-employed write off all their income, and they do not qualify. And so that's unfortunate for them, but they do save money without paying taxes, but they end up not being able to get loans. So that's the number one reason why people use private money. The other one is people with credit issues, and the third is to close quickly, and there's all different reasons why people close quickly. So self-employed, and not only self-employed, but you've got people like yourselves, if you're from Japan, that you don't have taxes in the US, so you cannot come here and qualify for a loan. So we qualify on people's equity, not on their income, but we do look at it. But if you're coming from another country, you have no way of showing income. So it's just used with common sense, and equity is the number one most important thing when you do private money lending. The second one is credit. And again, if you're coming from Japan, you have no credit scores, no credit history. And so that's where private money can help you out, because we don't look at that. Again, it's all about the equity, and there's all different reasons people have credit issues, and doesn't mean they're not paying their bills, but something happened in their lives that caused them to miss a few payments, and the next thing you know, they have bad credit scores. And number three, which is kind of what's going on in our market right now, to close quickly, we have a lot of people who are sellers are looking for cash buyers, and they're not waiting for people to do conventional lending. And so cash buyers and private money borrowers are really the number one choices for them. And we have closed loans in 3 days, and it's not very hard to do that. So it makes us pretty important when it comes to certain deals to get them done. All right, the money for us to lend comes from two ways. One is individual people like yourselves. If you ever wanted to be an investor, we get 8 to 9% interest on the money. And the beauty of individual investors is it's like a bank. You have to fit into a box. An individual investor can make its own decision, so they can decide, hey, I'll go a little bit higher on this, on loan to value, or whatever it is. But there's no laws on what they can or can't do. And then the other way is real estate funds, and those funds can be really aggressive on pricing. They can give you some really good rates, especially on fix and flips. They can go as low as 7%. And then the funds can do 10 million, 15, 20, $50 million loans. But you do have to fit in the box a little bit, but it's still pretty aggressive. But those are the two main ways where our money comes from. All right, amounts and interest rates. When we lend money, $50,000 would probably be the lowest amount we would go, and then there's no max. We'll do 70 million, 100 million. It doesn't matter. There's so much money out there, and these funds can do 500 million. So there is no number on that. So if you want to buy something really large, we can help you. And then, like I was saying, the rates for private money is 8 to 9%. 9%. I'm going to get a little bit into talking about loan to value. So when you buy a property for $1 million, we need to be at 70% loan to value. So 700,000 would be the highest loan amount, and that's where 9% would be the rate. As you go down in loan to value, then the rate gets cheaper. So for example, at 600,000 it'd be 8.5. At 500,000, the rate would be 8%. So that's how the rates work. It depends on the loan to value. Commercial properties, pretty similar. They can be a little bit more challenging to get done, so the rates may get a little bit higher, but they're in the same ballpark. And land and new construction, much riskier loans for investors. Land deals are, if you ever did take one of those properties back, there is no income coming from it. So that's why a lot of investors won't touch those. And then new construction or just construction in general, there's an issue. These things can be quite a problem and can take years to get resolved sometimes. So the rates get higher because of the risk factor. And all the payments are interest only, because at that rate, you cannot pay principal and interest. It would be too expensive. So interest only is how the payments are made. And you can pay it down if you want. Most people don't. They just pay the interest and then eventually get a conventional loan or sell the property to take us out. The cost of the loans. It really depends on the loan amount, but in general, 2 points. So if there's a purchase for $1 million and you're borrowing 500,000, 2 points, that would be $10,000. That's the loan cost. But if you're borrowing 200,000, then the cost may be 3 points because it's a lower loan amount. So it fluctuates depending on the size of the loan. So the types of properties, we pretty much do everything: residential, commercial, construction, land loans. And this is where I'll get into the loan to value here. Residential loans. So like I said, the most important part of our lending is the collateral of the property. That's how the investors are protected. 70% is the magic number. Most investors will not go above 70. They like to say 70, and the lower you get, the easier it gets. So again, example, $1 million purchase, you need to put down 300,000. We will lend you 700,000. And then when we do lend at 70% loan to value, the property needs to be in good condition. But let's say there's issues with the property. You need the bathrooms all messed up, or the kitchen, whatever it may be. We will still lend, but we will drop the loan to value to protect the investor. So we'll drop it to 65. There's a certain point where, when you do 50% down, there's really nothing to talk about. We'll do the loan. It's that simple. It's, that much equity, $1 million, and you lend 500, nobody's walking away from $500,000. So it gets pretty simple. When the loan to values drop, it's pretty much a no-brainer in our world. You may have condos with litigation. We will do those. And then there are condos where the owner occupancy can be an issue. If most of them are rented, then banks will not lend on them. So we will lend on properties or condos that have all investors in them or rentals. So little thing, but comes up now and then. Owner occupied is probably the hardest to get done in the private money world. The government has made it very difficult for us to do owner occupied. I've got two good sources to get those done. Again, it's similar to all the others. It's 30% down. I do have a loan that will go for 7 years. I have a loan that will do no prepayment penalty. So keep that in mind, because that may come up, and very, very important. Commercial loans. Well, as we know, the world's changed because of the virus, and a lot of people are now working from home and not in office buildings. So people are a little bit nervous about lending on commercial, but similar thing is loan to value, 70 or less. But the real concern is the rents that come from the commercial buildings. So it needs to be able to cash flow the loan. So those are the two most important parts, but equity is certainly still part of that. But $5 million, $10 million deals, not a problem. So if you guys want to buy one, let me know. All right, construction loans. Construction loans are one of the more riskier deals. I believe it or not, I did one 4 years ago, and it finally closed 2 weeks ago. We took 4 years to build 4 properties, so it can go really bad, and you have to be careful. But when you do one, you certainly want a lot of equity in the property, and land free and clear and all the permits. And then after, when it's finished, you want the loan to value again to be 70% or less, and in construction loans you like to be 65 or 60, and the terms are 12 to 18 months. I've got all different sources to get those done, but we do them. Yes, and then land loans. I'm closing a land loan downtown San Diego for $4 million this month we're in. The property's worth about $10.5 million, and the property's owned free and clear. The borrower needs the money for something else, so we will be lending on that. When you do land loans, you'd like the loan to value to be 50% or less, unless it's in a very, very wealthy neighborhood like La Jolla or Rancho Santa Fe. Then investors will go up a little bit higher to 60%, but not much above that. So that's kind of the number. And the problem with land loans is if you take it back, you do not get rent. And so that's one of the downsides of lending on land. Flipping houses, all different ways to get those done. But the cheapest way for an investor is really, we've got a fund that'll do 10% down, and we'll give you 100% of the construction cost. I have the rates between 8 and 11, but I'd say the rates are more between 7 and 9%. And so yeah, it's pretty aggressive on the flipping. Very, very challenging to buy a property now because they're being driven up. So it's hard to make a flip work because there's no equity in the deal. So I know some people are going to Florida now to start doing flipping. I've talked to 2 investors, and they bought like 12 properties in the last 3 months. So there you go, Florida. That's where you want to be, I guess. Seconds. We have people who have a really good rate on their first because rates are so low. So they get a 2.5% first, and then need money to go and maybe buy an investment property. So we will do seconds. I just closed one last week. And we just kind of educate you that when you do seconds, you got to be very, very careful, again, like construction and land loans, because if thing does not go right, and then you have to keep the first loan current. So one thing we try to stay away from is a very large first. And in my example, you'll see 800,000, and the person wants to borrow 100, and the value is 1.3. There's not a lot of room there in equity. The first is very large. We would probably pass on that property unless the value was like 3 million. Well, then there's the old saying, nobody's walking away from $2 million. So we'd probably lend if that was the case. But in this particular example, we wouldn't. We look to do something like at the bottom where the first loan is for 300,000, the second loan 300,000. So small first, we'll give a second of 300, value 1.3. We're below 50%. That's a good example of a loan that we would do in second position, and most lenders too. So there you go. That's how the seconds work. Foreclosures. So it hasn't been happening too often because values have been going up, but we do come across it, and we will lend with people who are in foreclosure, but loan to value is, as always, a huge issue. If a person's at 70%, we're not going to give them the money, because if we gave them the money, the next thing you know, they're back in foreclosure. Now we've got the problem. But if the value, loan to value is like 40% or 50, not a problem, because there's still plenty of equity. It'll buy the person time to sell the property. So we will do, so people with serious issues, we will lend to them, but the credit again is not the credit, but the loan to value is extremely important there. So I'm going to go over just a few examples. All these different situations I come across that people need the money. Here's an example of a couple getting divorced. They own the property up in Big Bear, and the property was free and clear, worth about $800. The husband wanted to keep it. He was self-employed, could not get a loan, so we lent him $400,000, 50% loan to value. Made a lot of sense. Good borrower, just didn't show income. And then I believe the next year he went and got a conventional loan. So here's an example of why people use private money. Here's a good example of using your equity from another property. This particular person was buying, and this is Sacramento, and that area can be really inexpensive. And this was 3 or 4 years ago. But this person wanted to buy a property for $250,000, and he owned the property free and clear for $150,000. So what you can do is cross both properties. So combined with the $250,000 purchase and the $150,000 he owned, we have $400,000 in real estate. We lent him 100%, which was $250,000. The loan to value was below 70%, 63%. And so he bought a property with no money down. So there are all different reasons, different ways to get deals done, and using other properties is one of them. So keep in mind, if you have a lot of equity, you can make something else work and not have to use your cash, the cash you have in savings. This happens quite often, and where people are looking to buy another property and they have not sold their current property, and sometimes they try to do it where you can cross, or what they call a bridge loan. So in this particular case, this person owned the property free and clear and wanted to move to Seattle, and it just came up and she wanted to buy it. So we lent $2.1 million on her $4 million property. It's a simple loan. Loan to value is like 50%. So very easy loan for us to do. It gave her the money to go pay cash in Seattle. So she paid cash, and then she came back and sold her property. So this happens quite often. If you have equity in one property, you can do what we talked about on the last one. You just cross both properties. This particular case, you just used all cash to pay for it. So keep that in mind, because that is a very challenging thing with contingencies these days. It's one way around it. So you get people that have a commercial property. This particular one owed $330,000, and getting a commercial loan is even more challenging than a residential loan. And the loan had come due, and the guy said, "I'm done trying to get this loan." So we lent him that money. The loan to value is like 30%, 33%. It's just too easy, right? Nobody's walking away from $700,000. So easy loan to do. Got him out of the mess he was in trying to get the loan, and he kept it for a year and sold the property. So and then you get people who, and this is where you can come in and really save the day. This particular person, and this happens a lot, where people, he was buying a condo downtown in the Bosa high-rise. The purchase price was like $1.1 million, and they weren't built yet. So he lived in New Jersey, bought the property, bought the condo, and moved here. So he started his practice, and when the condo was finished, he went to go get a loan, and he did not have a 2-year history of his business in San Diego, so they would not lend to him. So he had put a large deposit down for $100,000, and he would lose that money because he was not able to come up with the loan to buy it. So this is where we stepped in. He was able to come up with another $200,000 or whatever it was, $350 for the 30% down, and we lent them 70% of that purchase. And so we stepped in and saved the day for him. And then once he hit the 2-year mark, he was able to get a refinance and take us out. So a great example where private money can help save people in tight spots like that one. All right, so I did a loan for monks, and monks do not have a salary or show taxes. They had been waiting for a property for almost 30 years. It was a condo right next to the temple. So when that came available, they had money to put the down payment down, but could not qualify for a loan because they could not show taxes. So we stepped in, we gave them a loan for $150,000. They got that property they'd been waiting for years. And then a year later, they paid us off. But another example of why people use private money. Then some people just use it because they just don't want to deal with banks. This particular borrower, he just rather use us. And we give him a pretty good deal because we've done like 4 loans for him. But he bought a property in La Jolla, $2.1 million, $800 down, very simple loan. Needed it only for 3 months, and then he paid us off. And then, unfortunately, people get themselves. This is where the industry makes me crazy. On the conventional side of it, a couple went on vacation and missed the mortgage payment. And then in the conventional lending world, if you're above, I think now it's 750. Let's say you want a loan for $800,000, you cannot have a 30-day late on your mortgage in the last 12 months. If you do, you cannot get a loan. So you have to wait a total of 12 months without a 30-day late. So these people had found the property that they really wanted, and they couldn't get a loan. So we stepped in and gave them that loan. 6 months later, they paid us off, and it's unfortunate for them. I guess it was good for us because we lend to a lot of good borrowers here that just get themselves into, the conventional world's very, very challenging to get stuff done. So in the end, when we do loans, it's all about common sense. So when somebody buys a property and puts down $300,000, common sense says they are not going to walk away from this property. So it makes it easier to lend money when people do have a lot of equity in their property. And then when you meet the people, you just get a good understanding of who they are. And so a lot of it's done just on getting to know who the people are, and common sense that, that this won't be an issue getting the loan paid off down the road. All right.
Are you done?
Yes.
Oh, thank you so much, Ted. Yes. I like the presentation. I like the pictures. I saw the some famous person on the presentation. I like that.
Yeah, there's a few famous people on there. Tom Cruise and a bunch of them. Yeah, we got bored when we were doing our marketing, so we started coming up with crazy stuff, and we've got a whole bunch more of those, but we can only put so many on there.
I like your advertisement strategy. Like I see your sign, the company's sign, everywhere in San Diego.
Yes,
yes. I'm the bench. Sometimes I see the advertisement on the car. That is So anyway, I have a question.
Sure.
For you. Are you ready? Okay.
Yes.
So the question is, what do you like most about doing a hard money loan lending?
Sure. I think the thing I like it most, and I think it's right at looking at us on this last clip right here, is I used to do conventional loans, and people were so qualified for the loan, and the banks wouldn't give them the money. You'd have a loan to value. You have a person with a $5 million property owed $400,000. The loan to value is 10%. The FICO score is 760. And their income was off a little bit and they couldn't do it. And in the private money world, it's just common sense like I have right in front of us right here. So that's the best part. If it makes sense, you do it. If it doesn't make sense, you don't do it. And it makes it easy for everybody. Not all the craziness that comes with qualifying.
それが、日本語で言いますと、私が質問した内容は彼が一番、ね、お仕事をしててとても達成感があるのはどういう時ですかって聞いたら、やはり先ほど紹介した時にも言いましたけれども、スコアやその融資を受ける資格というかレベルがあるのにその融資を受けられない方たち、そういう方たちのを助けることができるということで、彼はそういう時にとても喜びを感じるというか達成感、お仕事しててよかったなと思うそうです。で、I have a question also, Ted.
Yeah.
What is your philosophy and motto,
Yes.
if you have it?
Yeah, when I do this industry, I work for both the borrower and the investor. And the investor really wants me to work for him because he wants to make more interest off the borrower. And the borrower wants me to make sure I get them a good loan because that's why they come to me. So I've got this incredible situation of making everybody happy. So my goal is to make sure it's a win-win for everybody. The borrower wins with a good loan. The investor wins with a good, safe investment. Certainly, if there's more risk in the deal, he should get a little higher rate. But if there's less risk, he gets a lower rate. So I try to make sure everybody's happy. It's not easy.
I like it. Yeah, I had when I was a listing agent, the buyer used the hard money loan like you do. Yeah. So it helped the investor. So アメリカではインベスターがフリップするとき、先ほど彼も言ってましたけれども、フリップするときにやはりつなぎ融資ですね。日本語で言うならつなぎ融資、氷貸しということはちょっと日本ではあまりいい印象がないかもしれませんけれども、本当にこちらのインベスターがフリップするときとかにこのハードマネーローンで、彼がさっきおっしゃってたように、その資金はどこから来るかというと、アメリカにはいっぱいこのインベスターがいて、投資をしたい方がいっぱいいるんですね。で、そのお金を投資したい方が例えばテッドさんとか、個人的にこのお金をね、プライベートマネーで貸している方もいますけれども、そういう方がこのお金をこのテッドさんの会社に出しているという、お金のその出所はそういう個人投資家から来ているということですね。はい。なのでアメリカでは本当にこのつなぎ融資として皆さん、例えばセルフエンプロイー、事業主の方とかはお金があるのにお金を借りることができないという、本当に住宅を買うときでもそうですけど、そういう状況がとても多いので、このつなぎ融資、ハードマネーローンっていうのはとてもアメリカ人でもそれぞれのシチュエーションに合わせて使っているような状況です。はい、OK. Thank you so much, Ted. And thank you for joining us today. And I will see you maybe later.
Okay. And one last thing, Yumiko, I can do loans around the whole country. So
whole country, great.
The whole country. So
whole
anywhere.
Country. So like people who came from the other country, like Hong Kong or Japan, they need what they need? Passport, the copy of the passport or something?
No, nothing like that. No, it's just done on, you don't have to worry about anything like that. It's really done on the loan to value of the property. And that's it.
Okay, so it looks like easy.
It is.
But the interest rate is not too high when I was expecting. It's not too high, like over 12%. It's not. So, okay. So I will keep in mind when I have customers and clients who need a hard money loan. And of course, I will contact you, ranchoted.
All right. Well,
Okay.
thank you very much. Okay.
Thank you so much.
You're
Thank
welcome.
you.
Yep.